With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB. I'm Nadine Blaney, and really pleased to let you know I've got Scotty here with me in studio just before we get there, because he's going to put all these market moves into context for us. I just want to show you this, because we show you the red on the way down. I got to show you the green on the way up. Now, I took that screenshot maybe about 15-20 minutes ago, so don't quote me on all of these final prices, but you get my point, don't you? An extraordinary snapback for the local market. So let's get some perspective. David Scotty from StoneX is joining me now. So there you go. That was the COB Australia Index up nearly 5%. Last of the day's trades going through the S&P ASX 200. It's kind of mind-blowing.
It is, and just desensitized to these swings now. We're just talking off air about Taiwan's index. It's had its fourth largest increase on record following its second largest drop on record, and it feels normal. And that's the kind of environment we're dealing with now. Just complete abnormality seems normal.
Yeah, so even our local market today, I think this is the biggest spike that we've seen in one day since the pandemic.
Yeah, it's since March 2020. Of course, many people remember that. We're getting locked down at the time, and liquidity injections were coming our way. But yeah, so it'll be a top 10 of all time by the time we go and settle up in about 10 minutes or so time. So it's a big game, but of course it's got to be put in context from where we're coming from.
Yeah, exactly. Because yesterday was wild too. So was the day before. Pretty much we've been on tenterhooks since so-called Liberation Day in the United States. JP Morgan economists have put it this way, and it resonated with me, that this is merely the end of the beginning. Investors should not get too comfortable, should they?
Definitely not. And I was on air with Andrew yesterday talking about what was going on in the bond market, and a lot of those issues still haven't been resolved. So that's a concern, because that's the world's largest and most liquid bond market. And when it's not functioning properly, there's not much hope for the rest of us. Okay,
I want to take a pause there because I want to delve into that a little bit deeper with you, Scotty. Just getting you across the three themes. Snap. So there's the snap back. Will it continue though? As I look now, US futures are coming under a bit of pressure, and they have been since I was on air. I think it was about 11 o'clock last. So that's one thing. Also, we're not seeing the US dollar holding up to the extent that it should be if we're seeing these big moves in markets. We're seeing a little bit of a safe haven play as we speak. And it all comes down to the Trump tariffs. I'm calling it 2.0. We could call it 3.0, whatever version we're in now. What we know is there still are 10% tariffs across the board, with a few exceptions here and there. But it is China that is firmly in the administration's sights. The gloves are off when it comes to China, but China's fighting back as well. Just one article that I read today, it's tough to even keep up with all of the information coming at us from all different corners, but China's e-commerce association group, whatever it is, saying that Chinese sellers will have to lift prices on Amazon exponentially, or they'll get off the platform altogether. So there's all of these reverberations that it's really hard to get a handle on what it will ultimately mean, of course, because it is still early days. And bond ambitions, and that's where I'll leave it. Vigilantes is a word that I think Scotty first taught me years and years ago when it comes to bond market and bond market participants. And he always told me that all roads go back to the bond market. And Trump blinked in the face of the bond market. So we'll get to the bottom of that in just a moment. Just quickly running you through the sectors of the day. I mean, banks, Commonwealth Bank up by 3.6% by the end. It was up further earlier on. Westpac up by 5.5%. You've got a feel for the economists at NAB. They came out this morning with a change in their interest rate call to 2 calls in May and really sped up the pace of cuts to take us to 2.6% in early 2026. But I just had to wonder today if that was made before we saw this pause come through from Donald Trump. Anyways, I should have put a call into them myself. I will do so tomorrow. Tech following US tech higher. Now, the miners also very high today. BHP up by 6%, but still at $36.14. We covered that on the call today if you'd like to go and listen to that. We've been doing a series all throughout the week asking our guests what they would buy in a market meltdown. And I don't mind telling you, we'll bring it to you a little bit later in this program. It's Macquarie for the third time this week. Gold looking pretty good. Some of the record heights for Aussie gold miners. Evolution up 7.5% at $7.10. And we saw oil rebound. And that's an interesting one. I mean, obviously oil has been really battered and bruised, but up about 4%, even though, again, this does not mean that we're not still concerned about global growth and pulse of global growth, but a reflection of this real knee-jerk reaction to that 90-day pause on the worst of the tariffs coming from the U.S. administration. Again, I'll run you through the news quite quickly. Boss Energy reaffirming its production guidance. Net wealth, new net flows record for the financial year to date. Stockland completing negotiations with partners to build the Waterloo Housing Renewal Project in Sydney. ABB is expecting earnings per share to grow 20% by FY28. And Hello World is rising. It's planning to buy a New Zealand-based travel company. Alcoa shares jumping as prices recover on the U.S. tariff reprieve. And well, the REITs today were so strong, jumping the most since March 2020 on the global markets rally, and rates looking still to be retreating. And COB, this is a story I saw late in the piece, advancing more than 4% after the ACCC approved its acquisition of a Melbourne car import terminal. That was also featured on the call, which was a technical special today. So welcome back to David Scuddy from StoneX. So yes, let's go back to that bond market because what is this indicative of? We saw the wheels really coming off in the Asian session later on, what day is it today? Wednesday. This seems like a really long week. Yep. So what was it? A strike? A buyer's strike?
I think that there was forced liquidations going on because the move was just so abrupt. But I was sitting there, and in the space that I sat down in the morning to where we were at about 1 o'clock when it really started to go and kick off, we had a 25 basis point increase move coming through in 10-year treasuries. There was no data, and I went back and looked over time today to see what we're actually looking at. And during that, the 2-hour stretch, the only times in the past 2 years that we'd seen similar kind of moves in the space of 2 hours were both after very, very hot inflation prints. Of course, we didn't have any data. So it was showing you that market functioning was misfunctioning. There were some serious issues there trying to go and digest at the same time. And it hasn't been resolved. Swap spreads are still very deeply negative at this point in time. So where you'd expect they would normally be trading above where US Treasury yields are, because you've got a credit component to it and the like, it's now trading deeply under. So the problems that are there are still in existence. And that's why for other asset classes out there, whilst we've had a big short covering rally today, that's why you've got to be very cautious about what's going on right now, because it has not been resolved. The bond market, all roads will come back to it, including Donald Trump, as we saw last night.
As we did see last night in real time. But for the likes of me, in plain terms, that's telling us that the bond market does not endorse this tariff plan. It is questioning. I mean, I've read a lot of articles today about questioning, this exceptionalism of the United States, whether it will continue. Questions being raised about demand for U.S. Treasuries, the willingness of people to lend to the United States, and even the ascendancy and the dominance of the U.S. dollar.
Yeah, we saw last night there was a 10-year Treasury note auction, and the demand, indirect demand, was very, very strong. So that's an indication, rough guide, that there was still a lot of foreign buyers willing to go and step into the plate there. But you're right. I think the events of the past week, and probably the past couple of months as well in particular, has really put a major scar in the way that the US is perceived, the trust that the world had. Now, it's not going to go and lose its reserve currency status or anything anytime soon, but if you're a reserve manager right now and you've got a choice as to where you're going to go and deploy capital, are you going to go and put into the US Treasury market, given how quickly policy can change, or you maybe go to another part of the developed world where policy may be a little bit more steady and you can go and expect what's actually going to come down the pipeline. And I think that there's been some serious damage to the US reputation internationally now. And yes, I think it's going to go and be a problem to go and finance this deficit, because right now you've gone and scaled back all the other tariffs. You've got all these tax cuts coming down the path. How's it going to be funded? And that's one of those questions right now where we're rejoicing today, but that's the next question you're going to start looking to, because there's nothing.
Yeah. Okay. So when you think about risk management right now, what does that look like to you in practicality?
Well, it depends on what kind of investor, whether you're a trader and the like. To me, at this point, after days like this, you've had a big move in a lot of speculative assets, but I question whether you can go and continue to go and see moves like that. Maybe you can go and extend for a period of time, but the environment is just so uncertain out there that high beta plays, very volatile plays, are just as likely to be whipsawed. We're one headline away from that completely reversing again. So you talked about gold and some of the gold miners doing well. Gold, even though it's sitting near record highs, I looked at today, from a fundamental perspective, it's one of those safe haven assets you can trust. And from a technical perspective, it looks beautiful as well. So that's one of those things to me, when you look at the areas to go and have your money allocated right now, I want to be in those safe havens that you can trust. And unfortunately right now, I can't really include the US dollar or US treasuries in that list.
Yeah, right. That's a big statement. So what are we looking at here? That was the SPY futures?
Yeah, SPY futures. So like what we're seeing, the moves of the past couple of weeks have just decimated technical levels and the like. But what they're showing there is that you can see there's a really strong uptrend. It became uptrend support. It's been tested and bounced off it a few times with the help. This is a weekly chart as well. So the red line is the 200-week moving average. But you can see around about 7735. So it bounced off that as well. So that's the kind of area that I'll be focusing right now. Of course, we're trading above it a lot higher right now, but I'm still not trusting the signal because what we saw today was a lot of short covering. There wasn't a lot of probably fundamental factors behind. So to me, looking at where the chart is at this point, looking at the price action, the risk still to the downside, but around about 7725, or sorry, 7400 or so from that level there is an area where it looks like it has some decent technical buying support.
All right, well, right now, I'll say we've got the S&P ASX 200 at 7,709, so a gain of 4.5%. Still have U.S. futures coming under a bit of pressure. Big gains, though, around the region. The KOSPI is up by 6%. The Topix is up by 8%. The Nikkei up by 8.6%. I don't remember seeing gains like that.
Yeah, you got to go back to crisis periods and coming out of crisis periods and things like that to see moves like that. The one thing I found really interesting today, though, is that talking about Japan, the Nikkei's had a good day, but the Japanese yen, in a really risk-on environment where you'd expect it to go and really excel, it's been strengthening the whole day. So again, that comes back to that dollar story, moving money out of the US dollar to other areas. So that's going to go and crimp Japan's export earnings and also given the environment. So again, one of those things, the bounce today was great in Nikkei, but can it be sustained in this environment? Might be difficult.
Okay, so we do have data tonight. We do have inflation data tonight. That's going to be really instructive.
Yeah, if you'd asked me maybe 2 days ago, I would have said not quite irrelevant, but it would have been very, very low down in the pecking order as to what markets would care about. But it's now taken a little bit more significance because we know we have a lot of speculation out there as to what the Fed's going to go and do. We know there's been a bit of flip-flopping, 5 cuts, 3 cuts. Now we're kind of landing around between 3 and 4. If it comes out hot again, and we've seen over time, over recent months, that a lot of those CPI prints have been a little bit hotter than expected, that's going to go and make it difficult for the Fed, a difficult choice to go either protect the economy or try and let inflation go and run riot. And it's not really a palatable choice. So if it comes out hot again tonight, it could go and spark some renewed selling because it's going to go and limit what the Fed can do, at least in the near term. Yeah,
and so when we talk about this Fed put, perhaps being non-existent this time, or at least being uncertain, because we did hear from Jay Powell on Sunday who said that they're dealing with the same uncertainty that business owners and investors are dealing with as well. Like, when do we have the Fed standing in the way of a big downturn this time?
Yes, but the criteria, the put level might be significantly lower. When I was watching some of the moves yesterday in the long end of the US curve, I was immediately thinking, at the point we started to get some emergency meetings coming through. We had one here in Australia, we had one in Japan as well, one in China. If things further got out of hand, and we don't know what would have happened if we didn't have that flip-flop from Trump last night, exactly what would have occurred. But that was kind of one of those moments where you start to have the largest debt market in the world malfunctioning is when the Fed will have to go and get involved in some form or another. But we're not there yet. But the Fed, certainly when it comes to an environment like this, where it's maybe a little bit more, risk is a little bit more on, it doesn't have to rush.
So we'll hear from the Reserve Bank of Australia, Governor Michelle Bullock tonight.
Good luck to her.
Oh, no kidding. I think there will be a Q&A afterwards. I actually haven't checked that out again. It's been a busy day in the newsroom, but obviously her speech is not about monetary policy.
Yeah.
But I mean, she will have to address what's going on right now.
She will. and I have to go and double check the website. If there's a Q&A section that's actually scheduled there, it means that it's been inserted by the organisers there. So keep a close eye on that. I'm sure she's going to have to go and address what's going on and everything else, because we've had a whole bunch of people coming through talking about the need for emergency 50 basis point rate cuts and 50 basis points in May. I liked how RBNZ played it yesterday. 25, we're willing to go and do more if it's required, not trying to go and rock the boat. And just knowing Michelle Bullock's a straight shooter, it's pretty obvious from her time as governor so far. And so I don't think she's the one to go and panic in this situation. So I think she'll probably give a pretty calm assessment and say, look, we're ready to go and move if it's required. We saw that in the statement a couple of weeks ago, and she'll just go and move on, because like everyone else, we don't know what the next headline's going to be.
Yeah, so what do you think of Phil O'Donoghue? Had a 50 basis point cut.
Poor
Deutsche
Phil.
Bank, well, I don't think any of us can throw stones, and had to bring it back to 25 basis points. NAB has still got their 50 basis point call that was just changed this morning for May. What is your best guess? 25 basis points, and probably conditional easing bias, and then just reinforcing that they're there to go and support the economy if it's required. But right now, things still are pretty decent in Australia. Like, yes, there's concerns about the private sector. There's a lot of uncertainty around the election, what the election outcome will be. So that points to the need to go and gradually reduce rates. But we're not in a crisis right now. There's no need to go and slash and burn. And just to answer the question, the event has no Q&A, but is open to the media. Yeah, we'll see what she says. We'll be talking about it tomorrow morning, no doubt. You stay there, Scotty. I'm just going to get our viewers across the stock of the day, which was Macquarie. I spoke with Michael Gable from Fairmont Equities and Jonathan Takadina from MPC Markets.
I think it could bounce back up towards about 210 before stalling again. But yeah, look, as I said, in these sorts of moves, I think a stock like Macquarie, which is pretty blue chip, it's pretty liquid, so you know that if the market's going to bounce, the big funds are going to be buying those sort of top 20 stocks to get that index exposure. And yeah, it's leveraged to upside. So for example, you wouldn't be buying something like a Woolworths, which is up about 1% today. I mean, that's pretty disappointing. I mean, we had a new client come on board, and that was one of the things we did earlier in the week was we had some Woolworths. I said, get rid of that, because when the market bounces, that's not going to do anything for you. You need to be buying Macquarie here.
It's actually been leading the finance sector on the way down. It's actually been the weakest. Like all the big four banks, especially Commonwealth Bank, has held up quite well in relative terms. And Macquarie got all the way down to 160, and obviously that was a nice level there. I think it's, as you said, it bounced up to about 185. So, just generally, Macquarie is a nice big blue chip. So in the finance sector, you want Commonwealth Bank and Macquarie. They're the two best.
So there you go. Macquarie, Adam Dawes from Shaw & Partner also had that as his buy in a market meltdown. Usually we do leaders and laggards. I'm just going to do leaders today because there are no companies on the 200 that are trading in negative territory, if you can believe that. Zipco is up by 24%, MinRes up by 19%, Boss Energy 17%, Paladin 17%, Netwealth 16%. So we'll skip the laggards. I think we do have the small cap leaders and laggards though, and you can see they're just a motley crew. Orthocell up by 20%, had a big announcement out earlier in the week. Flip the page, please, and let's take a look at what is lagging there. Some of those smaller idiosyncratic, resources plays, mostly explorers there. We have seen metals prices doing well today, and that has helped to push the materials sector higher. In fact, all 11 sectors ending higher today, being led by Infotech. So David Scott from StoneX is here with me. Let's take you through what we are expecting to get in terms of data through the overnight. So Scotty, CPI headline could lift about 0.1%, core 0.3%. So what you're saying is if we see those numbers coming in a little bit hot, could be enough to spook.
Yeah, we got a 0.4, of course, last month. So we get another similar one like that. It will start to go and raise concerns that we've got organic, mostly domestic-driven inflation. So that would be a concern for the Fed, and maybe rekindle some of those concerns about maybe that the full employment they could be trading through at this point in time. But we'll see what it comes out. It's still not going to be as important. It still comes across as a little bit stale. But it's taken a little bit more significance because we're dealing with, for the time being, slightly lesser tariffs.
Yeah, so here tomorrow, we've got migration and tourism data, which is always really interesting and does impact companies. I know Philip Pepe from Shaw Partners, my buddy there, he usually puts out a note on Hello World or something when we get the tourism data coming through. I'll keep my eye out for that. And we get the Combank household spending insights. I think to your point, Scotty, and this is anecdotal, but I had to run out at lunchtime here to pick something up, and you know, people are still spending.
Yeah, it's anecdotal evidence is always, yeah, it's one of those things like there's always people spending, but it's just whether they're spending at the same levels as what they are, and that's the difficult thing to go and kind of assess at this point in time. I know in my hometown in Adelaide right now, it's gathered around AFL. Probably Koshy's down there, probably juicing the spending right now. But it's humming along, and a lot of it comes down to how people feel about their property market.
Yeah, and the property market's going strong.
Yeah, exactly right.
All right, final check in on this market, Scotty. Here we go. The COB Australia Index closed up by 4.88%. The S&P ASX 200 up by 4.5%. So week to date, if you can believe it, we're up by about 0.5%, 7,709. Okay, just leave us with what we should as investors be looking out for as we make our way through the European toward the US session, and hopefully not today waking up at 4 o'clock in the morning and checking our phones and seeing that the whole world has changed.
Yeah, Europe's going to rally and rally hard because they missed out last night. And then the tough slog is going to go because we've repriced. But all I'd leave you with is that we've got China applying 84% tariff rates in the United States. We've got the United States applying 125% tariff rates on China. The two largest individual economies in the world are essentially no longer trading with each other. Is that a bullish environment? I'd argue no.
Got it. Nice to have you here. Thanks for joining us
Always
on the
better to be
COB once again. All right, we will see you from 9:45 tomorrow. You can catch up with anything you may have missed on ausbiz.com.au.